ZBH. All right, this is a pick from one of my YouTube followers, Sammy Bent. And always my pleasure to check out new takers. Sometimes there's some I've been following which are approaching critical levels, and I say, okay, it's time to do a podcast on them to isolate those thresholds you need to keep eye on, to be ahead of the curve, to be prepared. So when the price action does unfold, then you're ready to take a position based on your preparedness and not on fear of missing out. But I don't know. I like practicing also my art on any chart and just seeing where it fits. Sometimes it's ready to bust. Sometimes it's ready to boom. Sometimes it just needs time to marinate. So let's check it out, guys. So I always start checking the monthly candle chart. I like checking out the history, where it came from, to see where those previous monthly defined breakout levels, like here, and now I know if I extend it, that's going to be support. You could leave it there. It's identified. You won't miss it. So if ever it goes on the way down, then you know that you have important support right there. What I call a wall. Previous resistance turn support. And after that, you have natural support at the bottom of that formation. You could hit those levels, and that zone is a congestion area where you could be hitting it, bouncing up, going through, bouncing here, and zigzagging, either to sideways move, consolidate, then go down, or sideways move, consolidate, and then go back up. And then the cycle, stage analysis, up and down. All right. Scoot, scoot, scoot. Create some black area here to extend those lines. Monthly defined breakout level. So this is the top formation until the price action closes above that. Nothing to see here. It's actually been zigzagging. That 12-month moving average is flat, or zigzagging in the flat area, not into a beautiful stage 2 like here. Like, this is monthly candle chart, guys. Look at that. You could have been in here. You could have rode that wave from January, February, all the way 2013, all the way here until you close below it. 2 years later, great returns from 70 to $100, 110. Stage analysis. That's what you want to try to ride. Make everything weight of evidence, everything in your favor, so you're able to ride the maximum amount of time these waves here. All right, Pat, stop talking. Okay. Okay, so it's kind of messy here. What do we have? We have a closer support right here, monthly defined support tested, and then we broke down in December from that monthly defined support at 108. What else do we have? A little lower right here, we have some more support. We tested it once, and now we're tested again, and you see we had price action below those wicks. Again, noise from smaller time frames. There's some weekly closes in there, maybe dailies for sure, and 4 hours and whatever. There's tons of. So if you're playing on those small time frames, then you think it's going to keep going down, but then price action goes up. You get whipsawed. You don't understand. It's because you didn't go see that there was some monthly defined here. That close right here, that candle, that's the market telling you that I don't want to go lower than that. And the more times you test it, the stronger it is. So that monthly defined support, you sink through it on short term, on those smaller time frames. But by the end of the month, price action sucks back up. Tried the next month also, went deep inside. No, sucked back up, back above. That plays over and over. So that's what's happening here. But at the same time, after you broke down from here, you're actually starting to define a bigger top pattern. And there's one more level here I see. I want to identify it before I move on. And that's another level. And after that, it's pretty much a vacuum until we hit 68. Some congestion area here. I always look to know where my support is. I go down the run, and when I see red candles, that's some support, monthly defined support. Market decided not to go lower than that. Here, there's one, but it's only been tested once. It continued up. You could slow down here, these levels here and this one here, but not as much as the type of turbulence you're going to hit when you're around here, guys. And even here, you could see it. That's previous high, now turns support. Was resistance here, but you went right through it. Maybe it didn't mean that much. So it's acting maybe a diminished capacity right now. So I'm going to remove it. Okay, so here we are. 12-month average is going downwards. Now the price action is below. It wants to bounce back up, get close to that monthly defined support. If it doesn't go back, it's probably going to retest this level here. Maybe go down, and now you're going to retest these levels right here, monthly defined support, bounce back up. Now this supports and resistance, same old, and after that, maybe here. By that time, what happens? Well, all that price action is below the 12-month average, so it's going to keep skewing downwards and downwards. Lower highs, lower highs, lower highs. And these lower highs, they're opportunities to short, so you could zoom in on the time frames, on the weekly, on the daily. So what happens, the daily turns over first. So if we zoom in on the daily, it's going to probably be green, and then you're going to get a few red candles close to that monthly defined support and resistance, close probably to the 50 MA. And those are giving you good areas. Okay, the price is going to start turning over. You could look for some bearish divergence with a fast stock. And what weight of evidence, how's the sector doing, the industry that stock is in, the markets, all that adds up. You could look at economic data, everything to justify or support your case that this is going to keep going downwards. So when the daily turns over, then the weekly turns over, and then eventually the monthly turns over and get a red candle. But if you want to jump on board just before the monthly candle turns over, look for confirmation on the daily, and ideally a weekly close, a red candle after all those green candles that have moved back up towards that monthly defined breakdown line, now resistance. Great risk reward entry here, another one here. And guys, the final great risk reward entry is going to be when you break down, well, it's probably here, or when you break down below this bigger top pattern, guys. And let's see what kind of crazy target that's going to give me. Arrow, please. A measured move, man, that brings me all the way down here through this the wall. Not quite a fan. I would have liked a target that brought me down to this level here. But the purpose also of these targets is to give you the direction. So other than the 12-month average going downwards, if you have a confirmed breakdown that's going down, that swing rule from the monthly chart might not reach its target because it's running through support right here. Okay, so maybe this is a more probable target, this top pattern right here, than this bigger one. Maybe it's giving me clues that this is going to be a more important top pattern, that this support we might go through it faster. So let's see. But this measured move from this top pattern, giving me a target right above, a swing rule right above this congestion area, is a good low risk environment entry here, and good reward, higher probability chances of reaching that target and getting out. But remember, with stage analysis, you could stay even further than just a swing rule. You could stay as long as you're below 30-week average, as long as these pullbacks on the weekly. Let me zoom in like that. Whoa! These pullbacks on the weekly, they don't come back. You just keep doing lower highs. So if ever we had a pullback here, it came all the way back up above previous high, then you'd be out. Close above 30-week average, you'd be out. Violation of a 3-point trend line break on the 4th, you'd take half your position. Trend is slowing down. These all things that Stan Weinstein has identified in his book as observations that what happens when a stage 2 or stage 4 starts slowing down, and they're either entering stage 1 or 3. You don't want to stay there in stage 1 or 3. You want to ride the wave as fast as long as you can, but when it starts slowing down, you want to move your capital into a stock that's just exploding or just breaking down. Okay. Oof, lots of remove that. Remove those scribbles. Okay, I'll remove all my scribbles. Go back on the monthly. Redo my monthly defined breakdown line. My monthly defined support. And the final right here. Okay, let's go back on the Stan Weinstein setup. Okay, underperforming the SPX, Mansfield Ultra Strength. The red overlays because you're below a declining 30-week moving average. Those are checks. It's a confirmation Stan needed in his weight of evidence. What else do we have? Well, I have that red arrow right here. Look at that candle right here. This one here. Crescendo red volume on that huge down day. That's damage. You had some more here on these huge red volume candles. Look at that. That's a minus 7.7% week. That's a minus 6.5 week. Lots of damage. Right here. After stage 3, very volatile stage 3. Right now it's starting to really break down. Lower highs, consolidation, lower highs, pulling back. Hitting some weakly defined support and resistance, only tested once. So right now you're approaching a zone that you could be pulling back, hitting that weekly defined resistance, hitting that monthly defined resistance. You could be doing this. Could it go higher? Maybe it could pierce through as long as the month you close below that monthly defined breakdown line. Green volume on those candles, on those up days. You'd like it to keep contracting right now. Come back here. That's it. You want that contracting, still underperforming the SPX, so that's pretty good. What else? We could compare it to, let's compare it to the stock. Stock. Where's my stock? Here, weekly. I'm starting to dabble again. I used to love bearish divergence, but back in the early days when I used to do it, I used to use it in a nutshell. But it's part of the weight of evidence. Identify the supports, the key levels on the higher trend, the monthly. And then you could see if you start creating some divergence on the weekly, giving you clues that here's your lower highs. So divergence on the weekly, not quite there yet. Starting to build it up. So this might actually go up a little bit more. And then when it hits that monthly defined support resistance, then after that, go down. But by that time, it's going to have gone up a little bit, creating that bearish divergence with the price action, confirming even more that now that energy buildup on that way up, you could release it going down. Probably going to get more even on the daily. Fast stock. Where's my daily? Oh, okay, here it is. If you want even more precision, but I have less probability of materializing, but starting to get red candle here, hitting that 50-week MA, lower highs, and you see here you already have, no matter which one you take, you have bearish divergence. You're making higher highs on the stock, but the price action is still refuses to go higher. So all that energy, it's not able to go up higher, indicators, and that's going to create some pressure technical pressure saying, okay, you're done. You're going to go down from here. So I think it's going to slow down. Maybe a week. You got to check it out. Maybe 2 weeks. See how much steam it's got left. But it looks like a lot of the other stocks we have in the SPX or NASDAQ, that there was a sideways move, hard move down in December, pull back up, and now we're hitting key levels. Can even do the RSI, man. Let's do everything on the weekly. No divergence. And there's no bullish divergence either on the weekly. See, I'm doing lower highs. Lower lows on the price action, lower lows on the RSI. So there's no built up energy with that indicator telling us that we have a lot of juice to consume, a lot of fuel, a lot of spring action on the upwards. So that is pretty positive for stage 4 decline, guys. Still far away from that 30-week moving average. And I have that right here. Distance from 30-week moving average. Man, we did it all. How far we were? 10% away. So that is not the sweet spot. So let's see if it could catch up a little bit to 30-week average. Let the 30-week average go down, price action go up. And then when it turns back, close that 12-month moving average, we could say timber. All right, guys. Thanks for watching.